I look forward to all of your emails and your pitches soon. So we're here today to talk about the U.S.-China trade war and the impact it has had on the tech ecosystem. I'm here with John Rutledge, who is the Chief Investment Officer of Safanad, Allison, Baum, the partner at Trinity Ventures, and Edith, Yeung, who is a partner at Proof of Capital. So why don't we start by all of you kind of giving us a little bit of your background and your relation to this very topic.
Great. Hi, I'm Allison. I'm an investor at Trinity Ventures, where I focus on technology impacting the future of work. I'm also a co-founder and general partner of a fund called Fresco Capital, which I started when I was living in Hong Kong. So originally moved from New York to Hong Kong to launch a US-based business in Asia, and then started a fund which was specifically focused on making seed investments and helping companies set up international offices. So spent time investing and operating in Asia for over 6 years.
John Rutledge. I'm Chief Investment Officer of Safanad, which is $10 billion-ish real estate, private equity shop in New York and Dubai. My China interest really started a long while ago when I decided my 6 children's future depends on whether these two countries get along with each other or not. So I've probably been there 100 times, advised most of the senior leaders, and I'm a professor at the Chinese Academy of Sciences in Beijing. But I'm really an economist and mathematician by training.
Edith?
No kids yet, not 6 at least. So I actually have been spending half of my time between China and Silicon Valley. For the last 10 years, actually, I was previously the China partner for 500 startups. For Proof of Capital, we are actually actively looking at investing in both China and Silicon Valley. But before 500 Startup, I was actually working on a startup called Dolphin Browser, and our team was in Beijing, Wuhan. And then the entire product team and engineering team was actually in China, but yet all of our users was outside in the US. My mother is originally from Beijing, so half of my family is in Beijing and Guangzhou and Hong Kong.
Well, our panel topic is particularly newsy this week because American and Chinese negotiators were in Shanghai this week, picking up trade talks after 3 months of hiatus. So I wanted to know from all of you, what impact have you seen on the broader global VC and startup community from where you sit?
I think there's definitely been a huge impact, specifically around Chinese money investing in the US. So I guess 6 years ago, when we started raising our first venture fund in Hong Kong, there was a lot of excitement. There were a lot of Chinese investors who were making LP investments in US funds to learn about the ecosystem, build relationships. Then that shifted toward making direct investments in US startups. And now it's moved toward pretty much moving a lot of the capital to the Chinese domestic ecosystem. So since 2016, Chinese direct investment in the US has dropped by 90%, which is pretty dramatic. So we're definitely seeing a change in the ecosystem.
Do you agree, John?
I think I particularly focus on more on the software side of investment. And it's interesting to think about sort of the overall between what's going on between China and US. Most of the trade talks is actually related to more like tangible, like soybeans, hardware. And of course, we're not going to go there today, but obviously like Huawei is the center of a lot of this conversation. But on the more like software side, particular in the China region, if we're investing in things that's particular more B2C software, there isn't actually an immediate impact per se. But of course, like for the enterprise, more for B2B, I think some of the operators definitely for sure, like later on when they do sell to these more hardware tangible things, it probably will get impacted. But although I think like the biggest signal that being sent is unfortunate sometimes like technology get lumped into politics, but I definitely don't think that is a zero-sum game. And the way that sort of building companies between China and US is really quite different if you focus on domestic market. So for now, not immediate impact.
What about you, John?
Well, as for the Shanghai meetings, nothing was accomplished this week, and nothing was expected to be accomplished. They blew up the meetings in May. There was a trade deal that was ready to be done between February and May. and it was blown up along the way. The stories are about Chinese changing the terms. The reality is the White House also backed up on it. There are two power groups in the White House. One of them, the face of it, is probably Steve Mnuchin, but it's Steve and Larry and Wilbur, and think of them as the free market gang. And then there's another group, Peter Navarro, and behind him Bolton, and the shadow lurking behind all of them is Bannon, all of whom want to find a way to stunt China's growth and stop China from being a large world power. So this tariffs are really just the tip of the spear on this thing. And it goes beyond that to capital flows and other things. And of course, all those things are tied together. When you make noise about hurting China, you scare investors off. That knocks the RMB down. The RMB down changes import and export prices. And the great irony is both countries imposed a 10% tariff on some goods. That knocked the RMB down 10%. So Chinese goods in America are no more expensive today than they were before because the currency exactly offset the tariff, but only for the goods that are taxed. The ones that are not specified have actually had a 10% price reduction here, which is why Chinese exports to us have not dropped very much. American goods in China are up 20% in price, 10% tariff, and a 10% currency change. That's why you have a 30% drop in U.S. exports to China in the last year. So currency market, trade, economy, capital flows, politics are all hooked together and all in play right now. A dangerous situation, I think.
I think also it's not necessarily the exact wording or the tariffs themselves, but also just the perception of uncertainty. And I was recently in DC with NVCA, which is the National Venture Capital Association, meeting with regulators on the topic of CFIUS, which is an interagency committee which was previously designated to regulate international buyers of U.S. companies, so large kind of corporate M&A. But since last year, the scope of CFIUS has actually been dramatically expanded. So they're now able to regulate minority investments in U.S. companies, and the definition of the technology that they're focused on used to be very national security, critical technology focused, but they've expanded the definition of critical technology to include things like AI or biotechnology, which almost any startup could really fall under that purview. And so not a lot of people are talking about that, but they're in the process of drafting concrete regulations, which could last for years and years.
Yeah, and related to that, end of last year, CFIUS also literally have written and pinpoint very specific Chinese-backed funds. And many of the Chinese-backed funds, which actually have offices in Silicon Valley, and they basically have shut down most of their offices because they realize they can't get into most of these AI or robotics-related deals. But what's also really interesting is that M&A is also getting impacted. So last year, Alibaba wanted to acquire MoneyGram, which basically just didn't happen. And there's another deal, which is Kunlun bought Grindr, and they didn't actually report. And now the rumor said that they actually being forced to sell their ownership to U.S. owner. So there's a lot of things going on for sure.
And CFIUS is run by the Treasury, and Treasury reports to the White House. It's extraordinarily political process. I'm a chairman of a company actually in front of CFIUS right now for a decision this week by a Chinese investor. And it's not a rule book that you follow and you get approved. It's whether someone likes you or doesn't like you.
By design, the process of approval is very opaque.
So John, I know you've been advising the White House on China-related issues such as tariffs and trade.
Yep.
Can you tell us about some of the conversations you've been having and why the president seems so divided on this issue?
Well, a divided president sounds like you're referring to schizophrenia, which is not entirely inappropriate. If you saw the tweets yesterday that went out during the trade meeting, while Steve is sitting across the table from Liu He, there are tweets coming out as if they don't have smartphones in that room and can read English. And so this is not a well thought through process. I've advised 5 Republican presidents over the years, and I would not advise this one, but an old friend asked me to come in for a private briefing. So I briefed the entire trade team and the White House staff on these issues, essentially on that, on the economy, on the what kind of a trade deal I thought China would accept, what would work for us, et cetera. A deal like that was almost cut this spring. Intellectual property stuff, great progress there. Buy each other's stuff, great progress there. The problem is, as I talked with one of them, I don't want to use names here because we're on the camera, but as I talked with one of them is no one in that room essentially had ever been to China. And there's enormous ignorance, not only in policy circles here, but across the population as a whole. You know, right now, the Democrats are climbing over each other, trying to show who's more hostile to China than the other one, because it's a winner of a political issue with a population that doesn't understand anything about it. This is how bad things happen, is people don't know each other, they get in each other's face, and this is really a conflict at the society level because of that ignorance, I think. But inside the White House, the good news is that this is the 12th meeting, and so they've sat in a room across the table from these guys now 12 times, and they're starting to understand each other. You can't do a deal with somebody you don't know. Mm-hmm. You have to know where they came from, what their problems are, and so forth. And as one of the cabinet members asked me, he says, "What do you think Xi wants out of this?" I said, "Well, actually, you're the one who started it, so he wants you to go away, is what he wants." But I said, you know, really what the Chinese political system is looking for is, I'll call it face. It's a seat at the adult table in world matters, equal to the U.S. seat. The economy is large enough. We've got 4 times more people. It's going to happen. And if you could, we can give that to China for no cost whatsoever. And yet that's the one thing that they don't, the one thing they don't do. It's very foolish, I think, very foolish.
So Allison and Edith, I'm glad you guys are here because you have both worked and live, and you currently live and split your time between the U.S. and China. So can you tell us a little bit about what you're seeing on the ground, what you're hearing? Are folks there as concerned about this issue as they are here, and how are you adjusting your investment strategy?
I really enjoyed your comment earlier. I think in the Chinese community, we're often surprised by sort of the thumb politics that is going on Twitter. And then on top of that, some of the Chinese community would say, literally, you know, President Trump have written a book called Art of the Deal, right? And this is not how the Chinese negotiate. It's all about art of the war. It's all about long-term. And so in some ways, I think within the Chinese community, not just for VCs or entrepreneur per se, almost sort of increase the national pride, wanted to support. And I think yesterday or early this week, you know, Huawei actually, in terms of revenue, have increased revenue. And a lot of the local communities now would rather buy Huawei phone just in support of what's going on with the trade war and all that. So in some sense, I think that, you know, of course, in China, a lot of the media is completely controlled. So I think the Chinese community definitely, you know, wanted to support, and Liu He is actually definitely very long-term driven. Yeah. It's not just to dare to get a deal. Yeah. It's really wanted to build something that it worked for both sides. Yeah.
I think you make a really good point, and one of the changes that I observed when I was living in Hong Kong, but even now, is China moved from, you know, a willingness to collaborate to a determination to compete. And last year, venture capital investment in China was around 108 billion, which is almost equal to the US, which was 111 billion. And so the development of a local ecosystem, you know, 5 years ago, the conversation was, how do you bring US companies into China? And now it's Chinese companies moving out of China and truly being dominant. And I think the rhetoric in our government and kind of the xenophobic general sentiment is really only increasing national pride. And what scares me is I do think at a certain level, this becomes a conversation about which political system is better. And is an open, liberal, free speech economy. How do we compete versus a political and economic system like they have in China, where there's complete control, it's much more closed. So the way that this works out and the way these two ecosystems compete, I think has very big implications for the future of policy.
Yeah, one thing I do want to add is in the China internet ecosystem, we like to call it the BAT and the TMD. And what that means is Baidu, Alibaba, Tencent. TMD is Toutiao, Meituan, Didi. And basically, Toutiao is ByteDance, Meituan is like Groupon, and Didi, obviously, the Uber of China. So if you look at like what's going on in terms of M&A and investment, they know that coming to the U.S. will be tough. So what is actually going on between China and U.S. benefit some other region, particular activities for VCs, been a lot more active, particularly in Southeast Asia. You see a lot of action going on, particularly Indonesia, in Vietnam. And then Tencent, in terms of investment, have gone to Brazil recently and Europe. So just because the U.S. Is tough in terms of M&A or investment, is not necessarily stopping them per se, it's just going somewhere else.
As part of my role at Bloomberg, I get introduced to a lot of VCs and a lot of founders. One of the things I've noticed is that many of the Asian-based founders don't like to be compared to U.S. founders. So Lei Jun of Xiaomi doesn't like to be called the Steve Jobs of China. Will we ever see a day when we'll see the reverse? And this is actually part of our poll, so I want to bring up, audience, if you can bring out your phones to vote on our next poll. And the question for the poll is, what is the immediate impact if China surpasses Silicon Valley as the world's #1 tech capital? And the answers to choose from are: Silicon Valley would lose top talent, more VCs would set up shop in China, innovation would become more China-centric, Beijing would yield even more influence in its innovation economy, or other tech hubs would have a greater chance at surpassing Silicon Valley. So I'll give you a few minutes to vote on the answer, but in the meantime, John, I wanted to ask you about China's new STAR board, which is tech-focused and modeled after the U.S. NASDAQ stock market this month. This is the country's latest attempt to kind of avoid losing the next Alibaba to exchanges in the U.S. and Hong Kong. What are your thoughts on the timing of this launch and how well it's doing, given the heightened tensions with the U.S.?
Well, remember in China, the Shenzhen market was started for the same purpose before Kospi was started in Korea. The man who was known, an old friend of mine, my former boss at the Chinese Academy, was Cheng Sui. Cheng Sui was the vice chairman of the Standing Committee. He was known in China as the father of venture capital. He set up the Shenzhen market. And one of the problems people don't know about in the U.S. is that the banking system in China was set up for large banks to loan money to large companies. There is no infrastructure in China for making small loans to small companies, which is why the gray market was set up, the peer market was set up, et cetera, to try and bridge that vacuum. Because of that, over the last 20 years, there are too many small IPOs in China, because that market was a more available source of capital than the credit market that you would do here in the Silicon Valley, along with the equity financing. And so there are a lot of small companies covered by no analysts with no trading and so forth. So I hope this fixes some of that. I don't think the timing of that was tied to the events going on back and forth. It just takes too long to do the work to set that up. But it's also gotten much tighter in China. There's a huge difference, in my experience, between what Xi Jinping has done and what Hu Jintao was doing. There was opening happening under Hu Jintao, and there's closing happening under Xi Jinping, both in terms of the media, in terms of information, in terms of communication, the internet, and so forth. So that has also changed the environment. But I think the more capital, the better for the financing.
Have we seen examples of U.S. startups who have received financial backing from Chinese VCs now shifting direction And similarly, have we seen examples of Chinese startups who have received financial commitments from US VCs now backing out? Have either of you seen?
Yeah, I've had co-investors from China in companies here in the U.S., and they've not been able to follow on in subsequent rounds because they've shut down their U.S. investing. So that's happened a number of times. There's obviously some explicit divestment when we were talking previously about CFIUS, and I think we could see more of that. But now I think the way it's being manifested is mostly just Chinese funds, shifting away from U.S. investment and focusing on domestic investments. Have you, Edith?
Yeah, I think over the Chinese VCs activities here definitely have dropped very much. But on the flip side, in terms of US VC, like the well-known VCs that we know here, like Sequoia, IDG, Lightspeed, they are actually actively and in particular have like China-focused fund that they set up in China. So they absolutely continue to be very, very active. But if you actually look at, I actually released a China Internet report a couple of weeks ago, and we actually sort of list out like what are like the top 10 funding events by sectors, and also like in the last 12 months, what are some of the top IPO. And you will see a lot of familiar names continue to be Sequoia, IDG, SoftBank, and the BAT, particular Baidu and Tencent, pretty much invest in like all the top 10 IPO companies that recently. And it's also interesting, as you talked about that the Shanghai Tech Board. What's really interesting is this: most of the most recent IPO, particularly China Internet, many of them still actually have this sort of American dream, wanting to get listed on New York Stock Exchange and NASDAQ, sort of ringing a bell, and that's still sort of that American dream in some way. IPO is ingrained in the Chinese internet entrepreneurs. So you see most of the big IPO either NASDAQ, New York Stock Exchange, or Hong Kong, but not necessarily within China board.
I think we have the results of the polls. So the question was the immediate impact of China surpassing Silicon Valley as the #1 tech capital. Looks like most people voted for more VCs would set up shop in China. So let's talk a little bit about that. If more VCs set up shop in China, what will that happen? What would be the impact on Silicon Valley and the startups here?
I don't think it's a zero-sum game, and in fact, let's say Sequoia particularly, they have teams in China led by Niu Shen, who's a founder of C-Trip, have done really, really well. And in fact, for the last few years, I don't have the exact number, but they have so many IPOs in the US, even this Chinese investment. And then also their India team been around for a long, long time. So just because there are more, I guess, VC setting up shop in China is not necessarily taking money away from Silicon Valley per se. And then I think that a lot of the consumer internet focused companies that Chinese VC are investing in, they're not coming here either. Is very, very separate market, particular more for regardless of B2C or B2B. Domestic market in China is very, very different. So I don't necessarily, I welcome all of you guys to come visit and hang out with me in Beijing or Shanghai. But the reality is, if you want to be competitive investing in China, you really need to find local VCs to understand what's going on in the local market.
So we have a few minutes left. I want to talk about supply chain changes, because what I'm hearing is that a lot of companies, especially tech companies, are moving operations away from China to other regions in the world, kind of taking part in being proactive ahead of the trade wars and tariffs. GoPro is one example, moving operations to Mexico. I've heard of Brazil as another area. So all of you, can you quickly give me some areas you're looking at as the next investment opportunities and where you are shifting your direction to?
Yeah, I think Mexico, Vietnam, a lot of companies are moving their supply chain away from China. But I don't think that that's going to happen in massive scale until there's some clarity around the tariffs and the trade war. So I think right now it's really difficult for founders and CEOs to evaluate what the cost is because there's so much uncertainty over what falls into what category. Certainly there's been a big shift in capital away from China and into Southeast Asia. So that's, we have some investments in my previous fund in Hong Kong and Indonesia, Singapore, the Philippines. And the number is rising dramatically in terms of dollars flowing into that region, but it's coming from a very, very low base. So there's still a really long way to go.
John?
The supply chain is one of the two big risks. The supply chain and the money chain are the two. The supply chain story is interesting because Mexican exports to the U.S. have increased almost dollar for dollar, with Chinese exports going down. What's going on there. I talked about this with the trade team, but trade numbers are very deceptive. Trade numbers are measured gross, which means if I sell a $1,000 component to Taiwan, that's measured as a $1,000 export, $1,000 import for them. If they then paint it green and sell it for $1,000.01 and ship it to China to have the last buffing put on it, that will be counted as a Taiwan export and a Chinese import. If China sends that back to the U.S. after putting 1 penny of work in it, that'll be a $1,000.02 export from China to the U.S. So bilateral trade numbers mean absolutely nothing, and you can't give them any attention whatsoever. The manufacturing was moving out of China, Guangdong, into other places already during the Hu Jintao years, just strictly for cost reasons. And places like Cambodia and Vietnam are the poster children for it, but everywhere really. If you're on a board, I'm on 7 boards now, and I've probably been on a bunch. It's very difficult to change a supply chain. If someone says, "Oh, let's stop making this thing in China and make it in somewhere else," it probably will take you 2 or 3 years to do the homework, analyze it, get the money, make the plans. You don't change supply chains overnight, other than buying and selling components. So if you buy and sell components and just change the order you sell them to different people, it'll completely change the trade numbers. And so the ignorance of people about trade's probably the second most complicated topic in economics, and people don't understand it. It allows that topic to be used as a political tool instead. We should be measuring value-added trade, not gross trade between countries, and not one country at a time anyway.
Unfortunately, we're up for time. Fascinating conversation. John Rutledge, Allison Baum, and Edith Yeung, thank you for joining me. I think we could easily talk for another hour.